Hey everyone, it's Daniel here from etfs. Hope you're all doing well. I want to talk about interest rates for 2023, right? Where are interest rates going? Are we going to see interest rates continue to move up higher and higher? Are we going to see a pause? Are we going to see a pivot that everyone's expecting? Rate cuts, when are they coming? Are they coming soon? Where are we headed with interest rates? Now, it's very interesting to see that the ECB, European Central Bank, has started to become more hawkish than the Fed, and you're starting to see some divergences where the Fed is starting to slow down the pace, while the ECB sounds like the Fed 6, 7 months back, where they said, okay, we got to ramp up interest rates and ramp up rate hikes in order to bring inflation down. And ECB saying that, okay, we expect inflation to be around the 4% target next or this year, and we expect rates to be either at 4 or above to bring inflation lower. Now, in the US, you do have few research firms, few analysts out there that expect that rates could either get to 6%, 7%, or even 8%, right? Will it happen? Let's see. I don't know. But what's very interesting is that Fed Bullard came out last year, talked about the Taylor rule, did a full presentation on the Taylor rule, and said that, hey, according to the Taylor rule, in order to get inflation lower, we need to bring rates above the inflation rate. So if inflation is around 7% in the US, does that mean we need to get above 7.1% in order to bring and tame inflation? And if we decide to pause all of a sudden and inflation doesn't come down lower, and we see inflation continues to persist, will that cause the Fed to do more than what the market is anticipating for this year? Because we're projecting this year that, yes, we are raising rates. We are going to keep it at elevated levels. And we're probably going to, very likely, we're going to raise rates this coming meeting, then the next coming meeting. And we're probably going to do it at a 25 basis point rate hikes. So less than what we've done previously with the 50 and 75. So we're still raising rates, but at a slower pace. And then the market's expecting a pause, right? We saw from the projections in December that the Fed projected interest rates slightly higher to 5.1%. What if the next meeting they come out and say, hey, inflation is not coming down, and we need to move the bar even higher from 5.1% to maybe 5.5 or 6%, right? It can definitely change. But what the market is fully pricing in, that a pause is coming. Now, this pause doesn't mean that, okay, rate cuts are coming, that pivot is coming all of a sudden, and time for the rate cuts. And why is that? Why can we expect in 2023 for the Fed to keep rates at elevated level? And, you may think that even if, let's say, data this year ends up being horrendous, ends up being very bad, the economy, the job losses increasing, is it still possible for the Fed to continue to keep rates higher and be late to the party in cutting rates? And I think it's very likely to see that. I think it's very likely to see that we could see a very late rate cut, a very late response from the Fed, because they told us last year that they don't want to get ahead of the game and start cutting rates all of a sudden, because if they're wrong about inflation and they start cutting rates and they call victory too soon, then they will lose credibility and they will have to fight inflation hard again, like in the 1970s, 1980s. What happened in the 1970s and 80s? Well, in the 1970s, 80s, we saw the Federal Reserve increase interest rates, cut interest rates, and then decide again, ramp up interest rates to even higher elevated levels because inflation came back with a vengeance, and it continued to move up, and it wasn't a win the Fed realized that they messed up, and they had to ramp up inflation even higher, which caused a very, very painful response in the economy. Right? Growth deteriorated very quickly. So the Fed wants to avoid that 1970s, 80s kind of situation and not really increase interest rates, cut it, and then increase it again. They're going for increase interest rates, maybe pause. If it's not coming down, if we get the next couple of months higher inflation reports, we're probably going to increase even more, maybe approach 6, then 7, then 8, until something really breaks. And I think that's what we are leaning towards for 2023. Even though the Fed says they're going to they're projecting a soft landing, they're projecting a soft landing, they're projecting a soft landing. Even though they say that, I don't think they're going to be able to manage to do that. I think that they will eventually break something. They will push rates higher and continue to go higher, and they're just going to wait and see. They're going to be like, okay, rates are up. What's inflation like? Inflation's higher or it's not coming down? Okay, maybe we have to raise rates more. Or if it's slightly coming down, okay, let's pause. Come down, pause. Come down, pause. Inflation's coming down, pause. Rates are still elevated. If it comes back up or goes up and goes higher and it's not solving, then let's hit inflation again harder with rates again. But probably not at the level that we saw in 2022 unless we make new highs in inflation, we approach 9.1% all over again, then sure, you can expect the Fed to be way more aggressive, and you can be sure that something is eventually going to break with higher and higher rates. Now, another thing that I want to talk about, why I think rates will stay elevated for some time, not just what the Fed has told us, because they have told us many things and they can come out and they can end up being wrong, right? Like they told us inflation was transitory and they ended up being wrong. They can definitely be wrong about this and end up cutting sooner than later. But why I still think that a higher rates to stay longer than usual is because when you look back in 2001 and 2008, it took time for the Federal Reserve to basically cut rates. It takes about an average, so when the rate hikes stop, on average, when you look at history, it's about, let's say 5 to 7 months. 5 to 7 months or 6 to 7 months of a pause to then finally get a rate cut. So if we take that into consideration, 5 to 7 months would probably take us around June, July, August, maybe September, around that area. And so if we start a pause within the next month or two, then that pause would probably stay until maybe July, let's say July to September. And then around that area, you can expect that after July or after September, we might start hearing about rate cuts. And probably by that time, something may have broken. Right? Something may have broke. and the economy is really deteriorating. If not, then probably we're going to see longer pause or higher rates for a longer period of time, or maybe continuation of increasing interest rates if the economy can continue to handle the blows of the rate hikes. But I think when you look at history and when you look at back in previous years, that the Fed has always been late. When you look at 1980s, you look at 2001, 2008, you look at 2004, and so on. The Fed has always been late, has paused for a very long time, and then when something is really, when the economy is at max pain, when the pain threshold is really at max levels, Then they come to the rescue and say, okay, we are now the messiahs, we are now the heroes that are going to help, and they start cutting rates and softening the blows and helping the economy and start quantitative easing and printing of money and etc. and etc. So I think a very similar playbook for 2023 is that we could see a pause for a longer time, and I think the markets, the equity markets, are not really pricing that in. And if the equity markets are not really pricing that in, if they're expecting that, yes, they are expecting a pause, and if they're expecting that, okay, now that we have a pause, when's the rate cut coming? Because the markets are expecting when the rate cuts are coming. And if you notice, the equity markets keep moving up on the theme that this Fed pivot is coming, this Fed pivot is coming, especially last year. And if they don't get it from the Fed, and the Fed continues to be stubborn and say, hey, no rate cuts, no rate cuts, no rate cuts, and they keep saying that, and they keep saying we're going to keep rates elevated for a very long period of time, the markets will start to reprice things, and you could probably see a continuation of sell-off in the equity markets. So I think there is, if you look at history, enough information to tell us that a pause for a longer period of time is very likely. Could I be wrong? 100%. We'll wait and see what the story is. Every economic situation, every era could be very different. The fact that we increase interest rates at a very fast pace, maybe that could be the reason why we cut rates at a very fast pace also, right? Vice versa. So let's see what happens. But history has showed us and told us that, hey, it's very likely to see 6 to 7 months of a pause and then a rate cut, and the Fed tends to be very late to the party as usual, as they always have been. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button as well, and the bell icon to be notified on the next videos. And I'll see you guys around. Cheers. Bye.